Hey, yes, we are very happy once again to have the VP of Options at Simpler Trading back with us to talk a little options to kick off the new year. Miss Danielle Shay, Happy New Year, by the way. It's great to have you as always. We've been discussing this, as Sean was saying there, as we were leading into this, higher interest rates, inflationary environment where we're getting the Fed making all kinds of moves in an effort to kind of tame this and bring it back to earth a little bit. It's the start of the year. Everyone's looking for ideas. It's a different, obviously, environment than when we've been dealing with, the end of last year, even through the middle of last year. Talk a little bit about how you are going to approach this year in a way of higher inflation and higher interest rates on trade ideas.
Well, we definitely have some tailwinds there, right? And I think that's what we're seeing in the market right now. We had quite a bit of jitters yesterday after the Fed. For me, what I'm trying to focus on the fact is that, one of the main reasons why they're raising rates is because the economy is strong. And I'm looking towards companies that have done really well, especially over the course of the past year. I mean, even if you just look at consumer discretionary stocks like Home Depot and Lowe's, I mean, they've had fantastic earnings. They've had fantastic growth. They have a nice trend. I'm not looking as much at some of the really aggressive names, especially the meme stocks, but stocks like Home Depot and Lowe's, I mean, hey, we can trade them. They may not be the most exciting thing in the planet, but it'll do.
When it comes to time frame on an idea like that, I mean, we're going to get to earnings here in a second, but we're heading into earnings season once again. What is the time frame you're looking at here, Danielle, when it comes to something in the retail sector specifically? Is it going to be, a week or two, or are we talking about going into maybe the second half of the year?
So, historically, I've always traded about on a 3-week time frame or less, anywhere between overnight to about 3 weeks. But with the volatility that we've seen in the past 6 months, especially, I am stretching out those trades, especially in the options market, because they expire, right? So what I'm looking at right now is primarily 30 to 45 days out, especially when you have earnings coming up. I really like to look at companies and focus at least a month prior to earnings, see where they're trading, see what technical levels they're on, to see if I can get into them for a rally into those earnings reports.
So one of the questions we get all the time around here is, how do we play this COVID thing that seems to never want to go away? I mean, we just right now, literally, as we came on the air, see RCL back to day lows here on this short seller report from Hindenburg. I mean, Omicron is here. It's getting worse. I mean, there's lots and lots of cases, regardless of where you are in the world. How are you looking at playing some opportunities in the COVID space?
So, in the beginning, especially in 2020, I traded the Chewies, I traded the Pelotons, and there was a time where we traded the reopening plays. Honestly, at this point, those stocks to me are just so news driven. I really just have to focus on the companies that have been strong throughout it all. I mean, I like focusing on the semiconductors. I like focusing on the tech stocks, Microsoft, Apple, Google, especially because I'm an options trader. These stocks have a lot of liquidity. And so for me, that works out really well. And I'm actually just completely avoiding anything COVID related at this point, because you know what? Who knows what's going to happen next with that? So
it seems to take a different turn regardless of what day it is, or yes, day in and day out. We talk a lot about a new year, new mindset, coming up with a new plan going into the new trading year. I mean, it's only the first week, but it seems like we've had lots of action so far. Give us one or two, or maybe three if you like, best practices when it comes to options trading specifically. When you're starting a new year, what is it you want to focus on?
So with options trading specifically, you really just have to be focused on how the market is changing over time. And you really have to be focused on particular sectors, because with options trading, you have to be able to identify what areas are going to outperform, because options decay and they will literally just go to zero if the tickers that you pick trade sideways and do nothing. So you really have to be focused on identifying areas that are consolidating, that will potentially break out, particularly if they have some positive tailwinds, like I was mentioning, consumer discretionary is really strong right now. The housing market is really strong. Searching in those areas. And then also a main thing for traders this year is and what I've seen with our traders is you just have to have more patience. The market is not going straight up anymore. You have to sit through some volatility, and that means giving yourself a little bit more time if you're a swing trader like me.
Yeah, we had a great year last year, obviously, and as shorter term traders, we got spoiled a little bit maybe with the nonstop rally of 2021. We mentioned earnings here, Danielle. We're getting into some big names coming up next week, but the next kind of 2-3 weeks. What are you looking forward to for Q4 earnings season?
So, I think that this earnings season is really going to be make or break, especially because the NASDAQ is sitting just right on a key area of support right now. We're testing the lows that we saw in December. If those areas break and if these tech stocks can't get it together, I think we could be for a pretty nasty February. So that being said, what I'm looking for is really the same thing that I always look for every earnings season. I look for relative strength winners that have killed it last quarter and the previous at least 3 quarters I like to look at. But in general, if I could take an average of about 8 quarters or so, that's what I like to see. I like to see companies that have beat expectations, that have experienced breakaway gaps the prior quarter. And I like to see companies where, people are anticipating they're going to be positive reports. Generally, names like that are going to be NVIDIA, AMD, Microsoft, Apple, Netflix is typically really good, Amazon. And generally what we see during this time frame is a really nice rally into those reports. But what I'm concerned about with this quarter in particular is because the sentiment has changed a little bit, if we don't get that rally, then I'm really concerned that we could see a bigger breakdown here.
Yeah, so it'll be interesting to, the holiday season, I guess, will play a pretty big role on,
Yes.
the back end of some of those names that you mentioned. Apple, obviously, the biggest. We have a couple of questions, Danielle, from our audience, which I think are excellent questions. One of them regarding volume, and specifically with maybe a less volatility per se in the market in 2022. Are you anticipating volume in the options markets to be on the lower end?
So we have actually seen really the highest amount of volume that we've ever seen in the options market last year. I do think that there are going to be people dropping out. I think there's a lot of people that came into the options market when the market was going straight higher, and now it's getting a little bit more volatile, and they're thinking, hey, maybe this isn't really for me. But honestly, the volume's the best that I've ever seen it. And because of that, we're seeing price really playing around specific key numbers. And in the options market, that does give you a lot of opportunities to trade, even if the market's not going straight up, which is the positive thing about options.
A second one, and I'll read this word for word because it's kind of a 2-part question, but how do you determine what strike price to select when buying or selling options, especially when you get closer to expiration? Is there value in looking at key psychological values in that process?
So identifying the strike price is really one of the most important parts in options trading, and it's also the part that a lot of people get wrong. First of all, it's going to depend on if you're trying to buy or if you're trying to sell, okay? So for me personally, I use a lot of technical analysis. I use Fibonacci for my key targets, and then I also overlap that with key psychological values. I try to focus on trending charts. I hate to keep using Microsoft for an example, but it's a great example, and I trade it all the time. So if you're looking at, Microsoft or Apple, for example, I look for pullbacks to 21 EMA, 34 EMA, right around there. I throw some Fibonacci analysis on there to identify some targets, and then I overlap that with key psychological values. So that is how I identify a target or a strike price. If I'm selling the option, then I want that strike price to be above where my target is because I want to sell the option and have it decay, right? So that I can get my money. But if I'm buying the option, then I want it to hold that value while the price increases. So it just kind of depends. And you also need to, of course, take timing into consideration, which is, at what point do you think that ticker is going to be at that strike price?
Great stuff as always. Danielle Shay, VP of Options at Simpler Trading. We appreciate your time and knowledge in this space as always.
Thank you. It's awesome being on your show.
Thanks for coming by once again. Guys, some interesting but great ideas at the same point going into what should be pretty impressive earnings here.